Traders, hi warriors. Today we're going to be talking about cycles, a cycle that probably a lot of you are not aware of called the Epoch cycle. And we're joined by Ben Maldonado. And Ben's been working with this Epoch cycle since I've known him, and we've talked, I don't know, over the last 5 to 7 years.
Yeah, it's been a
He's a
while.
he's a co-founder of Plus Three Forecasting. He's got a nice YouTube channel and does a lot of posting with short-term stuff. Uses market geometry for a lot of his trading. So everything is math, and geometry is math. So Ben, great to have you here. Appreciate you coming to talk about where we're at in the epoch cycle, going into the elections and the end of the year. So, welcome to TradeGate Hub.
Thank you, Dale. It's always a pleasure to spend time with you because you're a guy who understands market history and the cycles are about studying the history and finding the patterns of when they repeat. And you mentioned the geometry that we use and I use in the trading that I do. Absolutely, it's there, and it's also there in the time cycles, right?
Okay.
There are time cycles that are related, using Fibonacci numbers, using the Fibonacci sequence extensions, and cycles repeat. And so we look for the patterns, and whenever I find them, I'm always excited about coming on your show and talking about them because it's really, really interesting stuff, as you know.
Yeah, and you've been right about a lot of things, Ben. You've been right to be bullish Bitcoin and bullish the metals, and had an avoid in the bonds while they were still going down and into the transition phase. And you're not afraid to flip or say you're wrong on things. And I appreciate that authenticity. But before we get to the cycles, it's been a long time since I've asked you this question. I'm interested, Ben, since you and I are talking about this at a fortuitous time in history,
Yeah.
what it was that led you into the financial markets. I mean, I know you went to Wharton.
Yeah.
Okay, so most people that go to Wharton, uh, they're very interested in business, but not necessarily financial markets. How did it happen to you? Um, what were you doing before you started trading and giving advice about what you saw?
It's an interesting story, Dale. All my life, I've always wondered why things happened. I drove my mother crazy because I asked her questions all the time. Why did that
Why,
happen?
Mom?
Why? Why did this happen? How come that happened? And so
That's great.
it's still with me. And it's funny because anybody who trades the markets and you've been in the markets for a while, you got to have that curiosity. And you got to, because it's the most amazing puzzle in the world that we're trying to solve, right?
It
And it's
is.
constantly changing and constantly adapting. So that was my main thing that attracted me to it. And then I also saw that there were certain people, whether it was in real estate or in the financial markets, that got in at the right time and got out at the right time. And I said, well, what do they know? Like, how do they do that? It
Yeah.
can't just be an accident that you know,
Luck.
Warren Buffett does it, or Druckenmiller does it, or Tudor
Yeah.
Jones does it. They must have some knowledge, right? It's not witchcraft. There's something that they're using to help them time the markets. And I even was looking, as a young guy, you're a lot of people are interested. If you're interested in sports, you're interested in sports betting. Like how are people successful at sports betting? Like, how do they know who to bet on? So there's an analytic part of it, and there's also a cycle part of it. So that's what always attracted me to it. And, out of school, I had job offers in New York. I didn't want to live in New York. I had lived in Philly for 4 years, and that was enough. No offense to the people from Philadelphia, but I'm not a Philly guy.
They're great sports fans.
Great sports fans, booed
Yes.
Santa Claus, threw snowballs at them. It's a tough town. I'm
It
not tough
is. It's
enough
a
with
tough
Philly, I
room. Yeah.
guess.
Yeah.
So I came back to the DC area, started working for a brokerage firm here, and then that led me on my journey to,
Okay.
become a trader, trading my own capital, and just really the journey has been for the last 20, 25 years of learning about the markets, examining why things happen, how to figure it out, what's behind it. And I'll tell you, while I have a ton of knowledge now, I realize how little I know now because
Right.
it's always evolving and there's something else to understand and to sort of put this puzzle together. So it's a lifelong pursuit, but I think it's keeping me young, it keeps me happy, it keeps me engaged, it's challenging. And that's kind of what excites me about trading in the markets.
And I bet you learned one thing with your brokerage experience. Here's my bet. You really didn't enjoy cold calling, did you, Ben Maldonado?
No, that's a tough job, but it's a good
Huh?
one, right? It's a good way to get as a young person get exposed to the real world and the business.
Yeah.
Everybody's not your mom. They're not going to take your call and they're not going to be happy to hear from you. You learn that really quickly.
Yes, yeah. So, okay, so you're at a firm, and the sales end of it didn't interest you as much as the markets interested you.
That's
Did you
right.
have a mentor or any major influences that led you along your path to discover cycle work? And who's responsible, or was it your own research that had you come up with the Epoch cycle?
It started with my own research, but then the partner that I do the plus three forecasting with, and we do our YouTube stuff and videos. He's the one that really kind of opened my eyes to some knowledge, and he never told me what it was. He would just like direct me here, go read this or look at this or mess
Okay.
around with that. And then I found a few things and expanded on a few things he had, and it's so Barry has been a really strong influence and helped a lot in terms of my growth and development.
What a great partner
Yeah.
that inspires you to grow. And how about the Epoch cycle, if I'm pronouncing it correctly? Epoch cycle.
Epoch. Yeah. Epoch.
Epoch.
Yeah.
Why don't you tell people a little bit about that cycle and what it means?
So the thing that was both frustrating and interesting to me is you'd find a cycle, like let's say a yearly cycle or a 6 week cycle or even a monthly cycle, and you'd see the recurring pattern in the markets, and then one would come up and nothing would happen. And you're like, well, that seems random. Why did that one not happen? And the puzzle is that while smaller and shorter cycles are happening, bigger cycles are also occurring. And sometimes the bigger cycle overrides the shorter term cycle and sort of cancels it
Okay.
out, right? You could expect some sort of change in trend. It doesn't happen, it just continues. So that the frustration of that and saying, oh, maybe this, initially, oh, this stuff doesn't work. It's a bunch of hocus pocus. It's just random. Then it led me to start looking at bigger cycles. And I got to this 400-year cycle that governs, a huge, like epoch, which the definition of epoch is a long period of time. And so 400, that's how I found this 400-year cycle. And we are in the tail end of it. Like when you and I first started talking, I think we had like 6, 8 years left in it. Now we're down to 2 or 3 years left. And
Okay.
so its influence becomes greater now because the change, when things only change once every 400 years, the change is massive.
Right,
And
slow and then all at once.
that's
As
right.
my associate and TradeView Markets head trader Mike Venezia says, the biggest moves always happen at the end.
Yeah. And I think that's what everybody's experience, whether they know about the epoch cycle or not, they're experiencing it now that everything is changing on a massive scale and at speeds that none of us are used to.
Okay, there are a lot of cycles, and I have followed many. Sometimes it's tricky because they invert.
Mhm.
where you might be expecting a peak and it turns out to be a low. You know
Correct.
the cycle's going to be there, but you don't know whether it's going to be a high or low until the trading into that time zone. Uh, I mean, is it possible that this cycle could invert too? And
Yeah.
we're
I mean, Dale, listen, what you're
uh,
saying needs to be like written in bold letters for everybody to read that's messing with cycles. Just because something's been going up into a cycle doesn't mean it's going to V and go down, right? You got to, which is why cycles are a fantastic tool, but they're not a be all and end all. You have to also look at what's the price action going into the
right,
cycle, what's the price action in the cycle window, what's the price action after, and then you figure out, here's the effect of the cycle. And I paid a lot of tuition early on because I thought, oh, we're going up, it's going to go down, I'm going to short it, I'm going to do this, I'm going to make all this money, and it runs you over because it keeps going. And a
right.
bigger cycle is influencing it.
Okay.
So that's a major thing for anybody
So,
that's
I mean, did you look back 400 years ago and see what was happening? I mean, we're talking about 1623. Isn't that when the Pilgrims came to America?
yeah, I mean
What was that Plymouth Rock, or I mean,
it's
what
roughly the
was the
same.
big trade? Was it tulips? Was it tulips in the 1600s?
Well, what the epic cycle is not specifically about the markets, is what it's about is what are the what do the energies of that cycle support in terms of governance and organization of society.
Okay,
And what we ushered in then was a period where we switched from sort of a feudal system where you had a lord and then serfs that worked the grounds
yeah,
to a more centralized system of governments and parliaments and
okay.
organizations that were going to be the
Magna Carta. Maybe it was
right,
the
the
Magna
people
Carta back then.
probably in that time frame, yeah. And that, but
Okay,
it was basically a transition on how societies are organized and run. And so we've gone from this epic that we're finishing now is all about large centralized organizations, right? Like big
right,
federal government, big state
right,
governments,
right,
governments and organizations that run society. Our policing is done by a police department, not by little local towns. Well, what we're shifting into now is decentralized, local, more small tribes, like smaller organized structures. The large ones are crumbling. And the thing that you and I have been talking about for 5+ years is confidence is going to start waning. And we're seeing it in spades now, how confidence is waning in these organizations and trust in them. And so
right.
people are going to start saying, you know what? I don't need that. I can use something else. I don't believe in that. That's not serving my interests anymore.
Yeah.
And the irony
Therefore,
is
yeah.
the because the big centralized powers are being marginalized or starting to be marginalized, they're gripping even tighter and trying to grab even harder, a harder grip on power. And it's not going to work. I mean, that's to me, that's the rainbow at the end of the storm here is that while we're going to go through a tough period because of all the authoritarian measures, and just look at what's going on in Europe, it's crazy. And it's really, I mean, people getting arrested and jailed for social media posts. I mean, that's the ultimate authoritarianism, right? Control what people say and what they think. But all that's going to fail. It's not going to work because
Okay,
the background frequency is not going to support it.
okay. All right. So let's talk about what everyone watches these shows for. And that's about how to make money,
How to make
how
money,
to
how to
how
position yourself. Yeah.
and how to preserve capital when things are looking shaky, and not only how to trade, but how to invest in this cycle that we're near the tail end. I mean, to me, 3 years, the older you get, the faster it goes.
Oh my God, it's crazy.
It'll be a blink of an eye So let's talk about what you're seeing, and you're using the metaphor of a hurricane, um, and we're leaving the eye of the storm. So the front end of the hurricane was when COVID.
You could say COVID, or you could say when we started correcting in late 21, early
Okay,
22, when we started, having the market, the bond market was getting trashed, and then the stock
got
market got
killed.
trashed. So to me, that was the arrival of the storm with COVID and all the issues there, and then the actual correction. And then for the last almost 2 years, since October of 22,
Yeah,
things have been
straight up.
pretty good, right? The
Yeah,
inflation's coming down, stock market's been up, risk is done very well. Um, Other than commodities, if you've been invested in the financial markets, you've done very, very well. And I think, as you said, the metaphor is that that's the eye of the storm, and now we're leaving the eye and heading back into the back end of the hurricane.
the outer wall.
Yeah, the
So
outer wall.
another forecast you made, and a lot of people were talking about that there was going to be problems in real estate, and there have been in commercial. But your cycle works said all last year when everyone was calling for a housing crash that you didn't see a peak in housing until 2025. So that call is held up despite one of the fastest tightening regimes in Fed history, besides Volcker.
Dale, when I put that out in like 22, I was like, man, I'm gonna have to eat these words because it sure looks like housing is rolling over. Like everything told me it was rolling over in 22, and that was it. But if I use housing for the real estate cycle because we have the Case-Shiller index where you can kind of
Right.
get ideas of pricing and get a decent idea of when a peak is, when a trough is. And it to me, the way the cycles fit, it was, January of 25 was the top. And right
Wow.
now, I think we made a high in housing in June. It was like an all-time high. So we're still chugging along unevenly, and it's probably going to be a little like the 2005 to 2007, where it doesn't go down, but it sort of bumps along the top and rounds out, and then we start heading down in earnest early next year.
Okay. Interesting. All right. So you always come with a great presentation laid out. So let's get to your what you're seeing now. And I think it's important because right now I know people have nervousness about the election, and people have nervousness about a lot of the geo risk out there. You also, I believe, have war cycles. Um, but besides that, there's an awful lot of complacency besides one day in the VIX. I mean, which was I've never seen before.
Amazing.
And then the round trip, I've never seen that before. I was sent a VIX chart that there are more that funds expanded hugely in the selling volatility um, ETFs. There are ETFs that execute that strategy,
Mhm.
and they came in and backed it up on that rally in VIX. So there's still a lot of people on the low volatility side. They didn't get cratered. It probably would have been healthy if they had been shaken up, but now they're
Yeah.
even shorter volatility than they were when the VIX went to 60.
I
What's
mean, it's
your
just
impression?
more tinder on the fire, right? It's
Yeah,
just
yeah,
waiting.
yeah. So tell us about what you're seeing now. Let's go through this presentation.
Okay, so as Dale said, we're in my cycle work, we're leaving the eye of the storm, and the major shift is I put it in sort of three primary areas. One is we're going from a period where we've had growth, for a long time we've had growth. I mean, like when we get 1% growth, people are screaming and crying. The cycle and the epoch that we're changing into is not going to support a lot of growth. So I think we're going to see next year and late this year, we're going to see no growth. Then they're going to announce that the recession started probably 6 months back from now.
Yeah,
But we'll see. But that's going to be a change. There's not going to be any economic growth. It's not just that there's going to be slow growth or limited growth. but I don't think we're going to have any growth. The other thing that's key, especially with related to risk in the financial markets, if fear and insecurity are the dominant feelings for the next couple of years, it's going to be really tough to grow the economy, and it's going to be really tough to see risk assets doing, kicking ass in the next year and a half, because people are going to be more concerned. And you've seen this every time we have the cycle, Dale. You've seen it where people on a dime switch from worrying about, oh, I'm not keeping up with the market, to I just want to keep my money.
Yeah.
And I think we're
That's
going to see that sort of shift in the not too
okay.
distant future. In studying cycles and history, market history, crises are always associated with debt liquidation. So you look where most of the debt has been accumulated. In the last major cycle, it was housing, right, with the mortgage crisis and the
Right.
mortgage-backed securities. This time it's been mainly in the sovereigns. So we're gonna expect to see. I don't think it's going to be the U.S. first. I think it's going to be other countries, smaller countries that have less resources. Because the whole thing about sovereign debt crisis, the only time they run into trouble is when they can't sell more debt to pay off the old debt. So that's going to happen. Some country's going to kick off the sovereign debt crisis, and that's going to result in change. It's a very familiar pattern in all these big turns. You have debt liquidation creates a crisis, which creates change. And then lastly, from a timing standpoint, you and I were just talking about this before we got on. We're in the window. The window for a major top. You and I had talked. We talk every 3 or 4 months on interviews, and the last time I said, yeah, we're looking for a July high. We got the July high, and
Right.
then between the times we talked, I said, hey, we could make a marginally higher high in this late August to early September window, and that looks like what we're trying to do here.
It
It's
does.
you can see the market struggling too. It's not, if this was a raging bull, we'd have taken out those highs on the last move up,
Yeah, and
off
the
that
Mag
August.
7 is the laggard now rather than the leader.
Exactly, exactly, and that's a problem, because for leadership to change, you got to generally have a bear market.
Okay,
And then
because
we'll
it
go over
takes
some
time.
highlighted markets that you can
Okay,
look in, taking advantage of these cycles.
sure.
So all year I've been telling people the second half of 2024 was going to be when things started getting chaotic. We're going to start to see um, events that create fear and uncertainty and essentially chaos. And so right after, June 30th, what's happened? And this is just on the political front. Assassination attempt on Trump. Sitting president decides not to run for re-election. Only happened 4 times in the history of our country. Third party candidate joins up with Trump, who had vowed of a lifelong Democrat, became a third party candidate. Now Kennedy joined up with Trump. I mean, those 3 things, if they happened in a decade, you'd say, wow, that's a crazy decade. They happened in 2 months.
Yeah, we're hearing words like unprecedented a lot,
Right.
aren't we? And or this hasn't happened in 50 years, or this hasn't happened in 100 years. We're, events that are uh, people are just saying are aberrations, but might be little shock waves and tells
Part of the
about
cycle. That's right. You're getting these,
foreshadowing,
yeah, we're getting
foreshadowing.
these
Yeah.
Six
Okay.
Sigma events, that don't happen that often. And in the markets, you just mentioned the VIX goes to 61 in a day.
Yeah.
I mean, you've never
I've
seen
never
that. I've
seen it.
never seen that happen.
No, it's never happened.
So it's those kinds of things that you have to expect. And if you expect it, hopefully you're more prepared, because the key thing in this whole thing, and what I try to make sure people understand, is I'm not a doom and gloomer. I'm trying to inform people so they're prepared and can act in a way that's in their self-interest instead of out of fear, where they're going to act against their own self-interest. So if you know that chaotic things are going to happen, you can kind of sit back and watch the movie and not get emotionally involved.
Okay.
And it's a hard thing to do. And I find myself doing it when I see headlines or I see crazy policies or crazy this or crazy that. I kind of start getting angry. And I'm like, hey, don't get involved. Just watch the movie. It's
Yeah.
part of the cycle.
That's
Watch
all
the
you
movie.
could do. You can't control these events, but you could understand the flow and be there for the event.
And control your reaction. That's the key thing. We can all control how we react to events. We cannot control the events that are outside of our own sphere. So that's
Okay.
enough of the preaching, but that's kind of hopefully what people can take from this.
Okay.
So we're going to look at the epoch cycle effects. They're happening every day. And another key thing I want to say about the epoch cycle, it's about the individual and not the collective, right? It's going to support individual, smaller tribal things, not big collective things. So the whole thing with the globalists talking about one world government and that's what they want to do, it's going to fail. It's not going to fail because I want it to fail, even though I do want it to fail. It's going to fail because the background frequency of the major cycle we're entering is not going to support it. So it's destined to fail. They may appear to win. They may cause a lot of chaos in trying to get to where they're going, but it's not going to work. It's going to be the time of the individual and small, not big and totalitarian and centralized control. That's not going to work.
So you think people are going to reject a central bank digital currency? There's nothing more centralized than that.
I absolutely think so. I think it's one of the reasons why you and I have talked about, at first I was suspicious about Bitcoin and then I came around because dummy, it took me a while to think, hell, this is exactly what the epic cycle is talking about. They're taking control of the money, the
Yeah.
currency away from the central government and the central bank, and it's being distributed where nobody controls it, right? It's all individuals working together in the community. No one person has the power to control
Okay. Yeah. It's a
it. And
classic
that's
thing
why
for
I'm a big,
decentralization for sure,
it's decentralization. That's exactly right.
as gold is.
As gold is. Same principle.
Okay.
Um, so we think we've got to think about going forward. We're going to see no growth with elevated inflation, tough environment, right? So you got to go back and study the 70s. You got to go back and study that period and say, what did well then? What did okay? Obviously, things that can grow in a no growth environment are going to be at a premium and they're going to
Why?
be.
I know he uses 70s analog, but in a 400-year cycle, why the 50? Why look back 50 years?
Because it's sort of the cycle within the cycle,
Okay.
right? You know, where you're what I was talking about when there's bigger cycles, it's hard to invest based on a 400-year cycle, right? So you got to come down and say, okay, what else is related to this
You know
400?
what, Ben? I think you'd probably have a pretty wide stop.
Yeah. So you come down and you say, what are the smaller cycles that are connected to it? And at the last bullet here, I'll show you the 68 analog. We're connected to that time period because we can look back, whether we experienced it or whether, we're just looking through history, we can look back and say, okay, this is how people reacted. This is what worked. This is how things played out. Not that it's going to be a carbon copy, but the same characteristics are going to be present. And it can give us a decent idea of, okay, what does it make sense for me to do with my money and how can I protect myself and potentially position myself for growth? The other chaos contributor is going to be the U.S. election. You and I have talked about this for a couple of years now, Dale. No matter who wins that election, the other side is not going to accept the result, either because of allegations of fraud or whatever they say, or they're just going to say it's not my president. I don't believe I don't listen to that person. I don't believe him. There's not the same sort of graceful losing that the side that
Al
didn't
Gore,
win.
like Al Gore did.
It's not doesn't happen anymore.
What's the
unfortunately.
end game? What's the end game? So we won't know on November 5th who the president is.
Unlikely,
How's it? Huh? How's it?
unlikely.
Yeah. So how does it get played out through the courts, through Congress, through the streets? How?
I think all of the above. And I'll show you my prediction for the election when we get to the slide there.
Okay.
Last thing on this slide let's talk about is
Because I'm going to bet it, man. Everyone's betting it. I can't, I mean, it's something to bet on.
absolutely, and those markets are more liquid than they used to be.
Probably, yeah.
Yeah. So the other thing I think is a cycle that I haven't named it yet, but I in studying this and trying to make all the connections, I came up with this. I think we're going from we were in hard assets up until 1971. Just the anniversary just passed. I think it was August 15th,
Oh,
1971.
Bretton Woods.
Nixon took us off the gold standard, right?
Okay, yeah.
So we went from hard assets where we had gold-backed money to purely paper assets. And I think we're coming back to the hard asset cycle where the paper is going to be done. I don't know how. It's going to obviously be chaotic and really, really violent in terms of the moves and everything. But you can sort of see it beginning to happen with what BRICS is trying to do. And maybe the US, I mean, listen, I think we have more reserves of oil than anybody in the whole world. Maybe we back it with oil, a combination of oil and gold or something. I don't know. But I do feel like the end of paper assets is coming and is probably going to coincide with the sovereign debt default or debt repudiation or debt jubilee, whatever they want to call it, where there's going to have to be some sort of hard asset backing whatever currency use. And maybe that comes, Dale, from smaller groups issuing currencies instead of nations. It'll be states
Well, yeah,
or
Texas wants to. I mean, there's talk of secession for years
yeah.
with different states.
I think all of that is on the table. I don't know. I obviously don't know how it's going to play out. I have no roadmap for that because nobody alive has ever lived through this. And the modern world has never seen an epic change. I mean, the last one, as you said, was in the late 1500s, early 1600s. So it's going to be new for everybody, but we know the characteristic. It's going to result in decentralized, more individual freedoms and individual control.
Okay.
Let's talk about the major thing that the epic cycle has been doing is degrading and destroying confidence in these large institutions. And this chart, I think, perfectly demonstrates that if it was a stock, we'd be shorting it. This
It
shows
looks like the dollar,
right, right. This is
dollar
the
analog.
people's confidence in major U.S. institutions from 1979 to 2023. And you can see as we get closer and closer to this 2027, 28 period where the new epoch comes in, we're just heading in a downtrend with these institutions.
Where do you think we'll be? Zero?
I don't know that it'll ever get to zero because you got people who, for whatever reason, they have to have faith in that and they'll
Yeah,
believe in it. But it's to the point where they're in the minority.
yeah.
And you talk to people and nobody believes, or I shouldn't say nobody, very few people believe in the integrity of the courts or of
The
the
media.
the media. Media is another great one. Corporations to look after people's health and best interests. I mean, it's all sort of coming to a head that this stuff is crashing.
Okay.
The
And
the the thing, the reason,
you know what they say about confidence, right?
what's that?
Everything's fine until people discover the con in
Well,
confidence.
there you go. I mean, that again, that's a perfect slogan for what's been happening.
Yeah.
This slide I'd like to show because if you look where for each of these sort of major institutions, where the low point is, it's not far off from where we are right now in time. There most of them are either 22 or 2023.
Okay.
And it's just again another sign of the decay and the decay in belief in these institutions that has to happen in order for them to fail and be replaced by something supported by the new epoch. The last one is just trends from the last 3 years, 21, 22, and 23, and you see the same thing. I mean, even in the military, which the military and small business, which have tremendous support, they've just been crushed in terms of confidence. The thing that's ironic, Dale, and you know this because you've been around and you understand how the media is used. If you look at what our leaders are saying and the message we get on the nightly news or from the news sources that people use, the mainstream news, when I saw this, I said, this has to go on there because this is the message they keep telling us. Everything's great. Everything's fine. Remain calm. We've got control. No worries. But every person you talk to on the street knows in their bones that things aren't right and something's amiss. So if I covered up what this was a chart of, would you be buying it or selling it?
Nice base.
You'd be
Hell
buying
of a
it,
long 3 or 4 year base.
right? And this is the unemployment index. So why am I showing this slide? Just to show you that I do think we're going to go into a period where we're going to see higher unemployment and a recession and no growth in the economy.
Okay.
The counterparty to that is, if you listen to Jay Powell, inflation has been defeated. But look where inflation is compared to 2020.
Yeah.
Even if inflation stopped going up, prices aren't
Still
going
here.
back to where they were unless we have
No.
deflation.
No, depression. We would need a depression for prices to get back down there.
And that,
What do you think of this, Ben? I heard forgot who said it, but he said that prices of things we own will deflate while prices of things we use will continue to inflate.
I think that's a perfect caption for the squeeze that's going to happen and is
Right.
happening.
It's happening. The missing part is the things we own,
Yes.
which would be real estate and
Stocks.
financial assets.
Yeah, that's right. So when that kicks in, which I think we're in the window where we could start seeing that once, if the prediction is right that we go up and make a new high here, I think we could be in that window fairly soon where we start seeing a deflation in the value of our assets.
Is there going to be any reason behind it, or is it going to just happen because of the pressure of the cycle, technical things, and they'll explain it later, well after the fact. That it's not going to be like some catalyst like um, Israel and Iran having a pretty important conflict.
I think you bring up a great point, Dale, because I do think smart people, connected people like Warren Buffett, they don't need anything. They just know and they start selling. And he has more cash than he's ever had and he continues to sell.
He has more T-bills than the Treasury.
Right. So his
There's
his
300 billion in Treasury bills.
people like him have been selling.
Yeah.
To get to spook the herd, it's got to be an event. And I think I heard you say it is that most recessions are started because of an oil shock. Right?
Right. That was Mark Chandler told me that.
Yeah.
Yes.
So I would assume that it's going to be based on the cycle and where we are, that it's going to be something geopolitical that's going to create the problems with the economy because of oil. And that'll start the ball rolling to get the herd spooked.
Well, you do war cycles too. So
Yeah, we
so I
are in a
mean,
war cycle. There's no question. We are in a
we're in it.
cycle.
When does it peak?
I think like 26, 27.
Okay, it's the same kind of time frame as the epic cycle unwinding.
And that's the Dale. I'm glad you brought that up because that's the thing that is so fascinating about this period is you have an epic cycle, which happens once every 400 years, right? That's not a high frequency type of cycle. But
Yeah.
there's so many other cycles that are layering in and filling in and ending and starting in this same period, like the war cycle, like the inflation cycle that we're going to go through. they're all coming together like in a perfect storm.
Confluence.
Yeah. Yep.
Wow.
Which is
Okay.
why it's going to be wild. Here's a little graphic that I think is important because as I'll show you near the end of the presentation, the analog to what's going on now versus 1968. I
Yeah.
think when you look at inflation, Powell may have declared victory and mission accomplished, a la George Bush, but I believe we're sort of in this lull period where inflation, spiked and now is pulled back, albeit to a higher level before it makes the next spike to a higher high.
Right.
And
And you have
anybody
the
that
three.
lived through the 70s or studied them
Yeah.
knows that there were waves of inflation. And I do
Three.
believe we're going to get the same thing.
How about it? That number three. And why did you choose three in plus forecasting as a number?
It's a good question. I don't remember, but I remember Barry telling me a reason why he wanted to do +3, and I was like, okay, do three. I'm good with it.
Because it's a
But it
number.
probably it does have
No,
something to do with cycles and numerology. I just can't
okay,
remember.
it's a number of completion. Three drives to a top.
Yeah.
Three is uh, the third time's a charm. Three, all of those three things. So I was
Three is also
curious.
the number of communication, so maybe that's why it's in there too.
Oh, okay. All right.
So there you go. This is the not exact path, but this is the general path I think we're going to see in inflation for the next few years. We'll see how it plays out. Now here's my election prediction,
Yeah. Okay.
and I think I'm going to be right because no matter who wins, I think we're going to be a fractured country still.
Yeah.
Hopefully
Uh,
not more. I mean, this is one where I really hope I'm wrong, but it just feels like there's no talking either side off of their ledge.
it's broken up families.
Yeah, friendships, families, I've heard about it. People have gotten divorced because of it.
Yeah.
It's wild. And I do think the pressure from the cycle is what's making it intense because husband there used to be the old saying, like wives would cancel out husbands' votes, right? They would one would vote for one and one would vote for the other, but that was the only day it mattered. Nobody else cared the rest of the year. Now it's a 24/7, 365 days a year thing
Yeah.
that whomever you support defines you and makes you the enemy to somebody who supports someone else.
It's
So
it's
so
it's
hopefully
exhausting. It's exhausting.
it is. Hopefully when we get to
I
the
avoid it. I just keep my head in the charts to distract me from all of it. Although I still watch the news that you can't believe just to see what I'm supposed to believe. But uh, Ben, so your prediction is this. Is there more to it as far as assets that you like during this time? I know you like gold and Bitcoin. You've turned bearish the dollar. You actually like the bonds for a little while.
yeah,
You're looking at oil turning up,
yep.
and I actually bought a wheat ETF a couple of days ago.
Oh, good for
I
you.
know I'm the boy who cried wolf on the grains, Ben, but I think they're turning now. Maybe they just needed a weaker dollar, but I can't see how they're not going to play a role in all of this for the next wave of inflation. With a weak dollar, I think people will come back to buy U.S. grains, and by that I mean China. China has not been buying U.S. grains. They've been going to South America. They've been buying them from Brazil, Argentina, to avoid the U.S. Um, give them a good price with the dollar coming down 10%, they'll be in the U.S. grain market, even if they do want to invade Taiwan.
Dale, I think you're 100% right, and I am watching the grains like an eagle, waiting for the the signs of hey, we've hit bottom and we can dive in because I agree with you. Food is going to be important. It's not going. We're not going to eat bricks. We got to eat food, and food's going to be important.
Ben, I hope you don't mind me saying this. First time I've seen you after all these years. I don't think we've used a camera before.
It's been a
You
while.
look like a very, very, very young Lou Panetta. Has anyone ever said that to you? I know that you're not insulted by that, are you?
No, he was the Yankees manager. He's a good ball player. I remember Lou Panetta.
No, I'm not talking about that Lou Panetta.
Which one?
The guy who ran the CIA, the political Lou Panetta.
Leon Panetta.
Leon
Yeah.
Panetta. Yeah. Are you okay with that? Don't
I'll
don't
take
tell
it.
your wife, huh?
It's all right.
All
I'll
right.
take it.
Anyway, uh, it was great going through this with you again, Ben. And I people can follow you on X at your name at Ben Maldonado and at +3 forecasting. Plus, you have a great YouTube channel and you do short-term stuff. So not everything is 400 years for Ben.
No.
I've seen 4 hour chart. So he's looking at that. You wouldn't happen to have one chart that shows your boxes and
Yeah,
rectangles
yeah. Let's
or
go to it. Let's
or
go to
the
the charts.
geometry. Just like look at there you go. So here's an example of geometry and how Ben uses it with these boxes. So um, I don't think you have to be uh, Albert Einstein to use this kind of thing. Do you teach it?
We haven't been, but we were talking about putting up some videos on the YouTube channel to explain people how they can set up their charts and use the boxes. I mean, it's basically it shows, and because I've studied this for 20 plus years, you see there's geometry in the markets. There's a vibration that the markets move on. And it all comes from the stuff with Gann. There's a
Yep.
free PDF out there that I recommend to everybody by William McLaurin called Gann Made Easy. Go Google it and you can get it. But you see that the prices move and it gives you a way of defining price action, right? You take this unlimited field and you can narrow it down to a box. Like, for example, now with this weekly, if price can't get above this red line, which is the bottom of this box, the top of this box, it means we're more likely to go down to the middle of this box, to the midline here, than we are to go up. So it
Okay.
helps you frame odds of what's more likely to happen. And you know where you're wrong, right? When we get a weekly bar that's over this box, then you say, okay, we're going to go up to the next half box. So it allows you to trade level to level and define your risk. And as you know, Dale, in the markets, that's the key to success. You don't have to be right 100% of the time. You just got to not be destroyed when you're wrong.
Ben, Gann was amazing, right? I
Yeah.
mean, they tell the story about how he not only called the time of day wheat was going to bottom. That's one of the famous stories.
Yep.
And yet here's a guy that was probably more accurate than most traders ever are in their lifetime. And one of his maxims was, and here's a guy that's probably had a pretty good hit rate, right? But better than 50%, like most of us grinding it out, right? But his expression was, if you don't learn how to change your mind, you won't have any change left. And that came from W.D. Gann, one of the most accurate market timers that ever walked the planet. So if a guy like that realized that he had to learn how to change his mind, everyone out there, whatever you're thinking, keep an open mind. It'll keep your account open. And
And
there's
you're Dale,
Ben's,
that's absolutely right. And what the boxes and the geometry gives us, it gives us spots where if something happens, you got to change your mind,
yeah,
right?
that's right.
It graphically shows you where a decision is going to be made. And when that decision is going to be made, if you want to keep your money or you want to make money, you got to react to it and you got to change sometimes.
You got to know where you're wrong before you get in,
That's
is
right.
my philosophy. So, Ben, it was great talking to you. I recommend people follow you, check out your stuff, and especially over the next 30 days. Let's see what happens with this cycle coming up. Glad we were able to inform people and give them a dose of potential, gravity might be coming back to the market. So uh, thank you very much, my trading warrior brother.
Dale, I always appreciate spending time with you and let's do it again soon.
All right, Ben Maldonado, everybody. Follow Ben, learn from Ben, and keep growing. And that's a wrap. It's this is also recorded. If you want to see it, it'll be on the site. And that I hope you guys enjoyed it as much as I do having conversations with Ben Maldonado. Adios, everyone. Don't just count your squares, count your blessings. See everyone tomorrow to wrap the week. Thanks again, buddy.
All right, buddy. Take care.
All right.
Bye bye.
Adios.